Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with a famous CNBC famous contributor, Mr. Todd Baldwin. How you doing, sir?
Thank you. Hey, I don't know about famous, but I'll take it.
Would infamous be better?
Oh, I kind of like the outlaw, like the bad boy of real estate. I could do that. I could do that.
Well, you certainly tell it how it is, and some people don't like that, and I appreciate that about you. We were talking pre-roll about my being comfortable talking about a housing crash. As we dig into it, is obviously very much around transactions, but transactions are meaningful. I think there's a lot of folks that will be hurt by it, but most importantly, I have changed my business. The real estate market is slowing down. I have to buy different, right? I'm a buy and hold guy. So I have to buy different. I'm getting a lot of heat for this. But I thought we should go through the 52-year spreadsheet with, all this economic metrics to really talk about this crash, because we have seen crashes before. The talk track is, the Great Recession, sure, but we haven't had others. Baloney. We've had at least two others, one in the early 80s, one with the Great Recession. We may have had others. I've had people comment, what about 94? What about 92? So I'm like, let's just you and I go through the spreadsheet together, and we'll see where we really see crashes. You ready?
Great. Yeah, let's do it.
All right. So again, folks, I want to reiterate, I give this spreadsheet away for free. It's now 24 hours of my life, and others have put this together for you. It's in my free course on Teachable. So can you see this now?
Absolutely. Yeah.
So what I want us to do is focus here on row 4 and 5.
Okay.
Actually, I wonder if I can quickly collapse these. This is what happens when you do this in real time.
You can hide them, I think.
Yeah, let's see if I can do it quickly.
Right click and then hide.
Hide. Okay, look at that.
That's impressive.
Almost like I know how to use. All right. So,
yeah.
You know what?
Well, I know technology is hard for you older guys.
Yeah. You got to remember, I was an accountant for a long time. So we got to.
Oh, that's right.
We got yeah.
Yeah. Okay. I forgot about that. You're probably much better at Excel than me. But anyway, yeah, let's dig in here.
So now we're just looking at these two rows because they only matter. And again, we're going to start in 1970. And what I want to look for is anytime we see a collapse in transactions, because that is going to be a sign for us that something is happening in the overall economy. I believe housing is two things. One, it is bought on payment. And two, it is bought because you're confident. You are not buying a home when you are afraid, right? Those are two things that I believe. What do you think?
Yeah, I would agree.
Okay, so here we go. So 70 to 71, they went up. Let's just do this. They went up in 72. New homes went down a little bit, 10% in 73, but new homes are up. So again, we need to see both going down, in my opinion.
Mm-hmm.
Again, something was going on with new homes, because that's the second year of collapse. And then we had new homes down like 5%, or existing homes sales down 5%. So not a crash. I would say it's building back up. So again, we get through the early 70s, really, no harm, no foul. Continues to build. Then, nope, continuing to build. Now we see a crack, right? So it went down, new homes went down 15% in 79. And then look at that crater, both new homes and existing home sales. So for me, I talk about the first crash again in this 52-year spreadsheet being 79. 79 is the peak. And what it does is it goes all the way to 82 before it turns around. You see that there?
Absolutely.
Do you have any memories of what might, maybe from your research, of what happened in the early 80s?
Yeah, I mean, it was a little bit before my time, but in looking back at historical crashes, it does seem to me that crashes are cyclical. It was a much different crash than 2008, because a lot of that was like subprime mortgages. Yeah. So I don't exactly know what happened in the 80s, but I actually do know of a guy who had a beautiful business, and he was building new construction homes in the Hollywood Hills. And as your spreadsheet has shown, the new construction slows down before existing homes. Yeah. And he had a $17 million business, and he lost everything.
Yeah. So this is, for the folks that don't know what happened in the late 70s to 80s, this is Paul Volcker. This is Paul Volcker taking the Fed funds rate to 16%. Basically, the cost of capital went up. It was unaffordable. I believe, again, lots of other variables, but what we are repeating right now, the start, which I'm calling for, is not 08. The debt structure is entirely different, but it is somewhat similar to 79. Is the Fed came in and broke housing. The Fed broke housing in 79. If you take the Fed funds to 16, that means 30-year mortgages are 18, 19, 20. Not a lot of people are doing that. Right. But the other thing I want people to realize is we were still selling homes. It's not like housing goes to zero. It falls. And I did the math yesterday. I think new home sales went down like 44% peak to trough. Existing home sales went down almost 50%.
Wow.
So again, the other thing to point out here is it's years. There are so many people talking about a crash like it's tomorrow or this year. There's a YouTuber out there talking about a crash in the next 30 days. That's not how housing works, right? This is years in the making. You see that here?
Absolutely.
All right, so let's come out of this. We got to 83, so it's starting to build, both new and existing, building again, building again, building again. Look at that. Again, the growth. What people need to take from this is the down cycles are shorter than the up cycles. That's what I take from this. Look at this. It just keep building on itself for, I don't know, was that 6 years? Yeah, 6 years. Let's keep going. Oh, okay, here we go. So, okay, 6 years. So we do have one in, let's call it 88 to 91. I didn't talk about this yesterday. So what did this go down? 676 to 509. That's about 25%. 1 year though, 1 year went down 20%, 89 to 90. New home sales, not that much, or existing home sales, 3.6 roughly to 3.2. That's about 10%. So that's probably why I didn't include it, but new home sales went down for sure.
Now, do you see, so when we talk about new home sales, I assume we're talking about new construction.
Correct.
And does that mean, during this crash, is it because just materials are more expensive? People aren't building? Why is it that new homes tend to get hit first?
Well, typically it's because they're more expensive, obviously, than existing home sales. There's also builders can get in trouble. Earlier, the first one was obviously interest rate. This may be a commodities-based one. There are lots of reasons why new builders can go out, and that's really what makes it complex. But yeah, I think it's very clear that new homes get hit first. And again, what did we see 3 weeks ago? New home sales was expected to be 750 and it was 509 or something.
Right.
So again, we're already seeing a crash. I mean, that's a 30% miss.
Well, and perhaps it's because construction loans are more expensive than regular mortgage loans too. So,
oh yeah, they're variable too.
Yeah, exactly. And a lot of times the terms are much shorter. You can have like a 2-year loan on a construction, and that loan comes due. And if you haven't sold the house, they could come take the property. So you have a lot of builders potentially shying away in times of crashes.
Yeah. So let's keep going. So I wouldn't really call 90 or 91 a crash because it doesn't meet my 20% mark on both character. It was certainly 20% on new, but it wasn't 20% on existing. So that's why I didn't include it. But again, this was fun to go through. So again, we're building, kind of flat here. Like 95 was just a hiccup. But we keep moving. Again, now we're into 2000. Look at home construction into 2000s. Over 1 million units. 1 million 2 years in a row. So again, the other crash that I talk about is 2005 was the peak. Look at that. 1.2 new, 7 million existing.
Wow.
And now watch this crater. Down, down, down. Existing actually bottoms first, but that was because everybody was foreclosing and short sale, which was still a transaction. And then we bottom in 2011. 6 years, we go from 1.283 to 306. 306. That's a 75% drop. Shocking, right?
For folks who bought in 2011, though, they're probably sitting pretty.
Oh, no question. Yeah, no question. Yeah. So the other thing to talk about is at least on new home construction. When did we get back? I don't even think we've ever been back to these numbers. I don't know that for sure, but we're going to check. I don't think we ever got back to 1.2 or 7 million. Let's see.
Maybe in 2020, there were a lot of home sales then, but
I don't think so.
Overseas.
No, 2021. No, we're still way below.
Yeah.
So again, that's what I mean by a crash. There's really two of them. I call a crash 20%. We've had two in the last years. I've had people talk about the Great Depression. The Great Depression is very different. We didn't have 30-year mortgages. We had very, very short-term paper. And again, I believe crashes and transactions equal opportunities. You don't, what drives me crazy is people think you have to have a national housing crash in price to find a good deal. That's not true. You just need to find the right motivated seller and offer the right solution, and you can get a deal. And oh, by the way, if they happen to have a lot of equity, go get terms, right?
I am a big fan of subject to buying on terms. I recently put together a transaction where I wasn't the buyer, I was the broker of it, basically doing a wholesale. But the buyer got such a good deal. They bought it on terms, and the interest rate was like 3%, and it was beautiful, right? But they got it at a higher price than what the house was worth. So for the seller, it made sense, but for the buyer, it really made sense, because even though they're paying a higher sticker price, so to speak, over the life of the loan, it's so much lower because of that low interest payment.
Yeah, I tell people, and I'm adding content to my course around terms. We did one with the CPA, Bob Langworthy. Thank you for doing that. We're doing more seller stuff. But yeah, terms are amazing. I've actually told investors to write 2 offers, one cash and then one with terms. And the beauty of terms, like Dion, who you know up in Seattle,
Yes,
or in Washington, Tacoma, I think. Anyways, I told him to write a cash offer on a fourplex at 1.1 and then a terms at 1.3. You can absolutely overpay. You go get a 30-year loan at 1%, you can pay a lot more than 6%.
Oh yeah.
Yeah.
Oh yeah, absolutely.
Yeah. So I think a crash is an opportunity for guys who are doing the work. Every time I see a negative article, I get excited because I know 2% of my competition goes away. Consumers are so repeatable. They're so predictable. Scare, 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 run away, run away, run away. I'm like, yeah, time to get greedy. Time to find some good deals. What do you think?
Absolutely. Yeah. I mean, it's when real estate, or even stocks, let's say, when the value goes down, all that means is for people like us, we go in and buy it. And then we ride the wave back up to the top. And when it gets to the top, if we want to sell, we can, or hold on over the long term, we can. So yeah, anytime people are panic selling, I hesitate to say it because of the backlash, but people like us are we're licking our chops at that stuff, because it's like, yeah, we'll take all of that and buy properties for sometimes pennies on the dollar.
Yeah, I will. I really mean this. And every time I see a negative article, and the other thing I want to say about the last crisis, because I was investing before, during, and after, is we had 4 years of negative headlines. Every day was another negative headline. And think about the compounding effect. That's 1,200 plus days of negative news. In 2010, there was nobody. There was like 7 buyers in all of Fresno, and we were picking stuff up just ridiculously priced. Again, I hope we have 4 years of negative headlines so that we can just do better terms, better deals, all this good stuff. But Todd, where can people find you?
Yes, if you guys want to follow me on Instagram, it is at Todd J. Baldwin. And I also have a YouTube channel that is just my name, Todd Baldwin.
Thanks, buddy. Take care.